When setting up her fruit and veg stall, Finda realized that running a small business came with many risks. Financial risks. Finda struggled with managing her cash flow. She didn't keep track of her daily sales or costs, and she mixed her personal and business finances. She also gave produce on credit to friends and family, believing they would pay her back in time. This meant she was short of cash to restock her stall and pay bills, putting her business at risk. Operational risks. Finda's stall was at risk due to unpredictable weather, which affected her fresh fruit and vegetable supply. Heavy rains or droughts could reduce the availability of fruits and vegetables, impacting her sales. Also, if she didn't have a backup plan for a supplier, any delay in deliveries could leave her stall empty. Market risks. Finda hadn't thought about how demand for her produce could go up and down, or that any new competitor stalls would have a big impact on her sales. During off-peak seasons, her sales dropped a lot, but she continued to buy the same amount of stock, leading to waste and financial losses. She also didn't predict the big impact of a new supermarket opening nearby, which would take away some of her customers with its wider selection and lower prices. Finda knew she needed help but was unsure where to turn. That's when her friend Mary suggested a local mentor-led course teaching small business management. Finda learned about the importance of understanding and managing risks in small businesses. She took steps to both think about the risks for her business and also plan what she should do if these risks happened. Financial risks. Finda set up a simple cash flow template for her stall, recording her daily sales and costs and keeping a separate bank account for her business. She became more strict with credits, only allowing them for trusted customers and setting clear terms for repayment. This helped her to not be short of cash and always have enough funds to restock her produce and pay her bills on time. Operational risks. Finda formed relationships with many suppliers to make sure she had backup options if one supplier faced issues. She also started checking weather forecasts and adjusted her stock levels to avoid waste during bad weather conditions. Market risks. Finda started to study market trends and adjust her stock based on customer demand. In off-peak seasons, she reduced her stock to cut down on waste. She also started offering a wider variety of goods, like homemade jams and ready-to-eat fruit salads, which attracted more customers. To compete with the new supermarket, Finda advertised the freshness and quality of her local produce, plus her personal touch and excellent customer service for her loyal customers. Within a few months, Finda began to see a big improvement. Realizing what her risks were and action steps to correct them had a strong foundation for her business. Moral of the story: be aware of the risks involved in running a small business and take action steps to reduce them.